Hi there, welcome to my weekly technical update. Typically release these videos on Sunday, and in today's video I'll be focusing on coal, looking at coal and two coal companies, particularly thermal coal companies in Whitehaven and New Hope. It is starting to look interesting, not in a good way for coal and coal companies. Also looking at, I think it's 8 or 9 other companies, and also look at an ETF. So the other companies I'll be focusing on in today's video include, other than New Hope Group, we also look at Dicker Data, Appen, Credit Corp Group, Pact Group, and AUB Group, Service Stream, Maas, M-A-A-S, not even sure how to pronounce that company, and Boral. And the ETF I'll be looking at is the Australian Technology ETF, ATEC. Now onto coal, and this is the Newcastle Coal Futures. I think this is the monthly chart going all the way back to 2011. And from about 2011 all the way through to 2021, coal was sort of predictable because when coal got to a price of about $120, that was usually the top of the trading range. And when coal got to about $50, that was the bottom of the trading range. It was in that trading range between 2011 all the way through to 2021, so 10-year period. And then towards the end of 2021, start of 2022, it broke through $120 and just kept on rising. In fact, it rose from that $120 all the way to a high of about $460 back in about July or August of last year. But we have seen a significant tumble in coal futures over the past 2 months. In January, coal futures, or coal, fell by about 33%. In fact, it fell from about $400 to less than $260. And that negative sentiment in coal continued, or has continued into February. And right now, coal is struggling to stay above $200. So this decrease in coal will have an effect, and has had an effect, on coal producing companies on the ASX, which include Whitehaven and New Hope. So let's have a look at the charts for Whitehaven and New Hope. The first of the two coal companies we're going to look at is Whitehaven. Then we'll have a look at New Hope in the next chart. This is Whitehaven's daily chart going back to March of last year. And there's a beautiful uptrend. This is a classic looking uptrend for a company's share price for Whitehaven during most of 2022, if not all of 2022. In fact, the share price of Whitehaven was about $1 in 2020, 2021. And at the height, the share price got to $11. So for any shareholder, for any trader who bought at the low at $1 and then sold at $11, it's 11 bagger. Imagine having an 11 bagger that was or is a coal company. You could have done that if you decided to trade in Whitehaven over the past few years. But anyway, that beautiful uptrend started to show signs of stress back in, we'll say, between November and December. We saw the share price reach a high of $11 in October, and then the share price pulled back from $11 back to $8. And around about $8, or just below $8, was a nice little support level, and that support level held strong when that share price dipped back. And then the share price of Whitehaven went on a little run late November into December. In fact, the share price went from that $8 back and tested that previous high we saw in October at $11. And because the share price couldn't pull through $11, that means that resistance level held firm. And this looks like a classic double top. And from that high we saw in late December at $11, we have seen the share price pull back because, of course, coal prices have pulled back as well. And there's 3 pretty bearish signals we have seen in Whitehaven's chart over the past week or so. The first bearish signal is that the share price of Whitehaven has fallen through that old high, or that old lows we saw back in November at about $7.90. And that's portrayed by that horizontal dashed line. So that means that support level has failed. Now, it doesn't mean it'll continue to fail. We might see the share price pull higher if coal prices go higher. So right now, we need that to be confirmed, that this support level has been broken, like at least another few trading days to confirm that. Another bearish signal we have seen is that the share price has fallen below the 150-day moving average, and we have also seen a crossover of the 25 and 75-day moving averages. Now, another little signal we have seen was an increase in selling during the past 4 trading days. And on the last trading day, we saw a peak in volume when the share price fell through that support level. That's another bearish signal. So a lot more bearish around Whitehaven, but of course, and this is the most important thing about Whitehaven, about any commodity or mining company, is that the underlying share price of that said mining company is highly correlated to the commodity they are mining. So if coal prices suddenly double in price in one day, you will see Whitehaven share price increase. Likewise, if coal prices keep on going down, we will see Whitehaven share price keep on going down from here. And likewise, New Hope, another coal producer, has a fairly similar chart than Whitehaven. That makes sense because there's going to be a high correlation between these two companies' share price and the coal prices. In fact, I was going to overlay the coal prices to these charts, but I decided just not to because it should be obvious that the share price is correlated to coal prices. And just like Whitehaven, we have seen New Hope's share price reach a very important level, and that's a nice little support level at $5.20. But unlike Whitehaven, New Hope Group's share price has stayed above that support level. So right now, that support level has held firm. And just like Whitehaven, we saw a massive increase in volume on the last trading day of the year. The last time we saw volume this high was way back in about June of last year, where we did see another big down day. So at this point in time, just like Whitehaven, this is starting to look a little bit more bearish, but this chart is not quite as bearish as Whitehaven, because a few things, even though the share price has fallen through the 150-day moving average, we have not seen a crossover of the 25 and 75, and we have not seen the share price fall below that support level at $5.20. Now on to all the other non-coal companies I'll be featuring in today's video. And the first company we're going to look at is Dicker Data. This company released their half-yearly numbers on the February the 8th, and the market did not like it. In fact, on February 8th, the share price dropped 11%, and then on the 9th, it dropped another 7%. And that's why, when you look at this particular chart, which is the weekly chart, in this 1 week, the share price has fallen a fair bit, say about 20% or so. In fact, the share price has fallen from nearly $11 down to below $9. But wait, there's more here. So I do like resistance and support levels. And the share price of Dicker Data during the week did fall below a support level at about $9. And as soon as the share price fell below $9, we saw a little bit of buying coming in, and the share price closed right on that support level. Now, that support level is fairly strong because we have seen the share price reach that support level twice in the past 2 years. First time was back in 2021. I think it was May 2021. Last time was a few months ago. So at this point in time, this support level has held firm for Dicker Data, but I'm a little bit concerned because this selling that has come in is based off the half-yearly numbers. I have not taken a look at the half-yearly numbers, so I don't know why the market is really negative about Dicker Data, but the share price, just based off the weekly, has moved into a down trend. Now, one of the reasons why there might be a little bit of selling when it comes to Dicker Data could be around the dividend. I did have a look at the dividend. It was a really small final dividend or half-year dividend or something. I don't know what it was, 2.5 cents. This time last year, that same dividend was 15 cents. So I'm not sure what's going on with that. There might be some other reasons, but that seems like a really small dividend for Dicker Data. So a little bit more bearish when it comes to this company. Share price has dropped from a high of around $18 or $16.50 back in July 2021 to a current share price of $9. So the share price not quite halved over the past few years, but it's getting to that point. And if the share price falls through this support level on strength, that would be a fairly bearish signal. Now, to be honest with you, I have no idea what's happening with Appen share price over the past few trading days. We saw the share price increase 4% on the 8th, then 8% on the 9th, then another 12.5% on the 10th. And those 3 trade days, we saw fairly large volume. So something is happening when it comes to Appen, and you can see the share price really taking off. In fact, the share price went above the previous high we saw back in December. So that could be a new high. So maybe the downtrend in Appen has come to an end. But I would suggest and say that because the share price of Appen has fallen a lot over the past few years, there's going to be a lot of resistance moving forward. The best way to get through resistance is with strength. And strength means high volume, like we have seen in the last 3 trading days. So what has caused this increased interest in Appen? Now, there could be a few reasons. I did see a substantial holding notice from the sovereign fund of Norway. So they bought some more shares or something, and their holding in Appen increased to above 5%. And the next day, there was a ceasing to be substantial holder from the Norwegian sovereign fund. So I'm not sure what was going on there. But maybe this increase in interest in Appen has to do with this increase in talk in AI, ChatGPT. Google released, did they release their competitor to ChatGPT? So maybe the market is thinking with this sort of this land grab towards this AI that Appen will benefit from that. I have no idea, but possibly that is a reason we have seen an increase in interest in this company and why the share price has really taken off the last 3 trading days. Now on to Credit Corp, and really intriguing trading of the shares in this company since the company, Credit Corp, released the half-year results on the 1st of February. In fact, really interesting trading on that particular day because there's a lot of different opinions about the half-year results. In fact, really negative opinions when the company opened on that day. In fact, the share price went as low as about $19.50 on that day. And then the next day, with more positive opinions coming out, the share price almost went to $25. So about a 25% increase in share price over 2 trading days because of the half-year results and different opinions of the half-year results. But then over the last about 6 trading days, we have seen a plunge in the share price, and maybe as investors, fund managers take a closer look at the half-year results, they think, well, maybe these results aren't quite as good as what we originally thought. In fact, the share price went below $20 again on the Friday, the 10th of February. We saw a little bit of buying coming in during that day. So it seems like around $20 might be a nice little support level for Credit Corp. The other thing we've seen since the company released half-year results is a massive explosion in volume. So an increased interest in this company since they released the half-year results. I haven't taken a close look at the half-year results. On first inspection, and sometimes my first inspection can be completely wrong, I wasn't that enthused by Credit Corp's half-year results. And that's probably understandable why there was a lot of negative sentiment initially when they released their results, because people like me, investors like me, who had a very glancery look at the half-year results, probably didn't see anything they liked, and those sold out on open. And then maybe some other investors who took a closer look found some things they liked, and they forced the share price up. And then who knows what happened over the last 6 trading days, forcing the share price down from about $24 to less than $20. Who knows? I haven't taken a close look at Credit Corp Group's half-year results just yet, and there's a chance I won't. But really interesting trading for this company over the past, since the 1st of February. AUB Group have not released half-year results. In fact, they're releasing their results on the 22nd of February. But when you look at the chart, particularly from around about November, this is a nice developing uptrend. So the share price is moving up. We've seen a higher high, higher low. The next high we want to get above is those highs back in, when was that? Start of 2022, share price went to about $26.50, and that is the all-time high for this company. And right now, the share price of AUB Group is about $25. So it's just shy of that all-time high we saw just over 1 year ago. So if the share price gets above $26.50, the share price of this company would be at an all-time high. And that is one thing you want to see if you are a shareholder of this company. So the only reason I've included AUB Group in this particular video is because I don't usually look at this company. They are an insurance broker. There's 2 main insurance brokers on the ASX, AUB Group and Steadfast. I have preferred Steadfast over AUB Group in the past, but when I compared Steadfast chart to AUB Group's chart definitely looks more bullish than steadfast. So if the share price can get above $26.50, get to an all-time high, that will be a bullish move for AUB Group. Just like we saw some really interesting trading when Credit Corp released their half-year results, when ServiceStream released a business update on the 9th of February at 4:37 p.m. I should mention that because they released this business update after trading had closed for the day. And typically, not always, but typically when a company releases an important announcement after trading has finished for the day, more than likely it's going to be negative. I'm not sure why they do it because whenever a company does that, we do see the share price open a fair bit lower the next trading day. And for ServiceStream, when I saw they did release that business update after trading had closed for the day, I thought more than likely it's going to be negative. And we saw, just like Credit Corp, really intriguing trading on the 10th of February after they released this announcement because the share price at one point in time was lower than the previous day. In fact, the low for the day was 57 cents. The previous day, the share price closed at about 58.5 cents. But we saw a lot of buying coming in during the day. And that buying forced the share price of ServiceStream up 7%. And the share price actually closed at 64.5 cents. So a nice little bullish day, excuse me, a nice little bullish day for ServiceStream. Unfortunately, when you look at the overall picture or the general picture of ServiceStream, particularly when they released their financial results in August, which were really negative, you just know they're negative just by looking at the market reaction. In fact, the share price went from over $1 the day before they released their financial results in August and all the way down to about 70 cents in about 6 trading days. That's a very definition of financial results the market absolutely hates, and that creates negative sentiment, and that new negative sentiment has forced the share price down to 63 cents right now. In fact, the share price was at a low of 57.5 cents during trading on the February the 10th. So this one business update doesn't change things for ServiceStream. Share price is still in a downtrend, but maybe this could be the end in the downtrend for ServiceStream if the market continues the momentum we have seen on the last trading day of the week. So I'd like to see some more buying coming in during the next trading week. And if that happens, that could be a good sign moving forward for ServiceStream. Another company that released their half-year results was Boral. They released their half-year results on the 8th of February, and the market actually liked it. Share price up 12.8% on that day on some pretty good volume. Unfortunately for Boral, we saw a lot of selling coming in the next 2 trading days. In fact, we saw the share price fall by more than 10% the next 2 trading days after that big update, forcing the share price down to where the share price was before they released their half-year results. But if you look at Boral's chart, you'll notice a sudden shift in sentiment right at the start of the calendar year. Share price of Boral was in a really nice downtrend, well-defined downtrend during most of 2022, sort of came out of this downtrend during November and December, and then the sentiment and the trend in the share price shifted like the 1st of January. In fact, the share price has rallied from $2.85 to a high of $4 over the past month and a half. So maybe what's happened in the last 2 trading days was a little bit of profit taking, or maybe some shareholders who bought in Boral during 2022 at higher prices saw the opportunity to sell out when Boral share price went on that nice little run when they released their half-year results on the 8th of February. But this chart is looking better. If we don't see any more selling, if we see a lower volume and the share price starting to go up, that would be a good sign moving forward for Boral. On the 9th of February, Maas Group, ticker code MGH, released the earnings update, and actually the market liked this one as well. Share price up 6%. In fact, on the day at the high in the share price, it was up 13%, but we did see a little bit of selling, which is understandable because the share price of Maas Group did fall a fair bit during the second half of 2022. In fact, the share price fell from about, we'll say, $5.20, $5.30 in the first half of 2022, all the way down to a low of $2.20. So the share price more than halved during 2022. So whenever we see the share price go on a little bit of a run, when the share price has fallen a lot in the previous year, there will be some resistance. There will be shareholders who now think this company is dog stock and they just have to sell no matter what. And when they see the share price go on a run, they see the opportunity to sell. And that's probably what happened with Maas Group when they released their earnings update on the 9th of February. I have not taken a look at the earnings update, but more than likely, based off the initial reaction from the market, it was positive. And if we continue to see the share price going up, so since the low in the share price in November at $2.20, the share price is moving into an uptrend. And I'd like to see uptrends just grind their way higher, like Maas has been doing since those lows in the share price back in November. So share price grinding up over the last 3 months, a nice little explosion in the share price on the back of this earnings update. And even though the share price has pulled back, that's not a negative. So right now, I am going to take a closer look at this company. I have not done any research on Maas Group, but based off this market reaction from this earnings update, I think I will have to take a closer look at this company. The last company I'll be looking at is Pact Group. This is a company I have held in the past when, or just after the IPO, share price was in a beautiful uptrend. And as soon as that uptrend was broken, I sold out, and the share price has fallen a significant amount since then. And the only reason I've included Pact Group in this chart right now is because the share price is struggling to fall below $1. And so $1, which is a round number, and round numbers tend to be fairly strong resistance and support levels because investors just love round numbers. We all love round numbers. $1 is a pretty significant round number, and Pact Group is struggling to fall below that. Doesn't mean it won't fall below that because there is a lot of negative sentiment in this company. This is one of the best well-defined downtrends you will ever see. Share price just keeps on dropping. There's no end in sight to the negative sentiment in this company. And I've included 2 dash lines here. The top dash line was the COVID-19 lows. So Pact Group has fallen below the COVID-19 lows, which was around $1.25. The second dash line is just on $1. And if I see $1 breach, that would be a negative sign. Now, the only way I would trade Pact Group is to take a position at $1, and the share price actually closed at $1 on the 10th of February. So I'd take a position at $1, and if I saw the share price fall below $1 over a few days, so 3 or 4 consecutive days below $1, I would take a loss because I think there is potential that this could be the low for Pact Group, but I don't think that's a definite, and that's why taking a position at $1 would be a low risk opportunity because if it falls below $1, you take your losses, and if the share price bounces, you could get a nice 25% bounce. You could see the share price bounce from $1 to $1.25. We saw that during January. Share price did bounce from $1 to $1.25, and I wouldn't be surprised to see that sort of bounce again. But be warned, the share price of this company is in a well-defined downtrend. But if this company releases any positive news, this company is looking cheap at these current valuations. The last chart I want to look at is the ETF, the Australian Technology ETF from Beta Shares, ATEC. And the only reason I want to show you this is because it does look like sentiment is starting to shift in this particular ETF, which might be sort of a harbinger of a shift in sentiment in the overall tech space in Australia. Doesn't mean necessarily it is, but it's starting to look a little bit more bullish. Now, I still think there's a lot of uncertainty about what's going to happen during 2023. Are we going to go into recession? Those sort of things. But just based off this one chart, it's starting to look a little bit more bullish. Share price of this particular ETF has moved into a nice little uptrend. The share price has pulled back to $17, and the previous high we saw back in December was at $17. So I'd like to see $17 remain strong, and then a nice little bounce off $17 to a new high, and that would be confirmation that ATEC ETF is in an uptrend. So I really haven't taken a close look at this Australian technology ETF in the past. I don't know the constituents. I have a bad feeling some of the constituents are sort of companies I would not include in this sort of ETF. I have no idea. So I'm going to take a closer look at this ETF over the next week. And maybe, just maybe, I'll do a video on this particular ETF. And if you'd like me to do a video individual video on this ETF, just leave your thoughts in the comment section of this video. That's all I have for this technical update, looking at numerous companies, including 2 coal companies and other companies whose charts are looking interesting right now. Many of these companies released their half-year results, and the market has reacted positively or negatively on the back of these results. So we are in result season. February is my second favorite month of the year after August. And over the next 2 weeks, 2 weeks left of February, we're going to see a plethora of financial results are released to the market, and I cannot wait. If you have any questions about any company I featured in today's video, I'd love to hear your thoughts, your questions, so leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.